Hi everyone, welcome to this new episode of TOI Wallet Talks. 2022 was a roller coaster ride for stock markets, and I'm sure as an investor you're wondering what's the best investment avenue to invest in 2023. Is it gold? Is it mutual funds? Is it real estate or fixed income? To answer these important questions, I have with me Adhil Shetty. He's the CEO of bankbazaar.com. Hi, sir.
Hi, Smriti. Thanks for having me here.
Thank you, sir. My first question to you is that what should be the mutual fund investment strategy of a small investor, both in short term and long term?
So there are two things I want as takeaways for the people listening in. So the first, right, is I'm a big believer in index passive funds. There's a lot of research out there, Smriti. Morningstar puts out a report which says in a majority of cases, the index passive fund has outperformed actively managed funds. If you look at the BSE index or the NSE index, returns over the last 5 to 10 years, right, have been over 10% per annum. It's a different matter that in the last 1 year, stocks have been down. But I'm saying on a risk-weighted return basis, I'm a big believer in index funds. The second thing I'm a big believer in, which I strongly recommend to everyone listening, is SIP. It's very, very hard to time the market, to decide exactly when to go in, when to come out. But the nice thing about an SIP, right, is you're constantly investing and you're building value for the future. If the only two things listeners take away, it would be my vote, saying the BSE and the NXE have grown over 10% per annum over the last 10 years. They're a safe, good instrument over the long term. And secondly, right, go in for your SIPs. The only thing to consider about debt funds is they give you additional tax benefit, because if you hold a debt mutual fund for more than 3 years, you pay long-term capital gains at 20% with indexation. So the effective rate is 10%, which is lower than what you pay with a fixed deposit. So that's something to consider.
Okay. And what is your outlook with regards to real estate?
So that's a great question, right? And I discuss it in detail in the new Bank Bazaar book, which is the Beetle and the Money Bug. Real estate is a sector which is booming. So we see retail banking data. At Bank Bazaar, we see the latest data from the RBI shows us home loan outstanding grew by 16%. You're going to continue to see many people aspiring, buying a house, taking a home loan. That being said, right, I think home is an emotional decision. I love my home because my family and I are building our future in it. We have a space we love. We call it our home. As an investment, however, I would take a different position. A home is an asset wherein even if you rent it out in the best of times, right, you're getting a 2, 3, 4% yield. It's very difficult to liquidate on a short-term basis. It's an asset which you tend to hold for a long time. So if you're thinking about a home, right, if you find a great home, please buy it, live in it, enjoy it, build a future in it. But if you're thinking of investing, right, I think there are far better instruments like mutual funds than to invest extra money in a apartment or a home property.
Okay, fair enough. And what about stocks? What are your, coming to equities? Do you think that this is a good year to get into IPOs? And two, what are the kind of stocks that you think investors should look at?
Yeah, so see, the answer I'm going to give you is fundamentally, I believe scientifically, data has proven the challenge with individual stock, right, is you can hit it big, but you can also go down into the dust. And that's why the index fund makes sense. There are variants of the index fund you can use. So typically a BSE fund, right, will have 35 stock, NSE fund will have 50 stock. But today, right, a lot of the mutual fund houses will give you 100 BSE top stock and 100 top NSE stock. They'll also say, I'll weight it equally. So all 100, I'll put the same amount of money. The data clearly shows, right? In a majority of cases, I repeat, we say this to everyone at Bank Bazaar, in a majority of cases, the index always beats both actively managed and individual stock. If you're thinking about investing for a long-term future, right, for your daughter's education, for a home, we find that these index funds perform best. I would strongly encourage anyone listening that if you're going in via a mutual fund. If you're going in via a stock, right, be aware. You can make a lot of money, but you can lose a lot of money. It's a risk you take.
Right, right. So you'd say that you would advise it only if you are a risk lover and not a risk averse person.
Absolutely. I'll tell you what, I'm in the industry of personal finance, but I'm not an expert in stock picking. I don't go out there and buy individual stocks because I recognize, right, that I'm
Right.
not an expert. I tend to go, right, with mutual funds. And within that, I tend to go with index mutual funds because I'm buying into the future of India. As long as the Indian economy keeps growing, as long as we are the fastest growing large economy in the world, right, these index funds will tend to give over 10% return like they have over the next decade, like they have over the past decade.
So it makes sense to balance your risk and invest, as you said, in the India growth story at a macro level.
Absolutely. I believe in the India growth story. I believe a lot of wealth will get created. I believe a lot of new companies, right? Young companies not only will go IPO, but will be the next bellwethers and will eventually end up in the NSE and the BSE index. And that's the time, right, that a risk averse, that's the time that a small investor needs to be part of that story, not when it's very, very risky.
Okay, so a related question for that is that there are a lot of global headwinds and uncertainties, and gold has been actually the go-to investment option amidst all the turmoil. So, what is your outlook on gold? Should you be investing in gold? And by that, I also mean gold ETFs and sovereign gold bonds.
Yeah, two things, Smriti. So I think when you go into gold, I really think gold ETF or digital gold makes total sense because you don't have to store the asset, liquidity is high. So I strongly recommend if you do decide to go into gold, go in via the ETF route.
Right.
Now, coming to gold itself as an asset, right? I'll tell you what me and my family do with gold. I think it's very important for an emotional and for a long-term holding in terms of jewelry, right? As a gift, as something you buy for your family members and so on. It's an emotional purchase. Now, gold as a asset you hold has certain key benefits. So, for example, when things are volatile, gold is an asset which you can trust, right? And it really stood the test of the crisis. Look at what happened to cryptocurrencies. They were supposed to be what will withstand volatility, but they completely crashed. But gold holds steady. But that being said, right, I think the thing with gold is it's an instrument which I think one needs to diversify when you're a sophisticated investor, when you want multiple asset classes, you think about having gold as an investment. But at the end of the day, right, it is an asset which tends to be volatile. It tends to have, its own costs associated with it. If you ask me, as a small investor, should you go into mutual funds or gold? I would still say, right, go heavy in mutual funds. Gold is an instrument which does tend to be volatile, and that volatility is very hard to control.
Okay. A lot of people actually invest outside through international funds. So, what is your outlook on that?
Yeah, I think if you're a sophisticated investor, you want to diversify, you want to put 10% in gold, 10% international, by all means do it, right? But you keep in mind that, if you look at what's happened with the S&P, if you look at what's happened with the NASDAQ, they've lost a quarter of their value in 2022. So I think it makes sense as a diversification instrument. But I think for someone like me, for someone who's listening, who's thinking about how to save for the future, I really like the India story. I like the fact that we're the fastest growing global economy. I like the fact, right, that our markets didn't crash 25% in 2022. So if you are a sophisticated investor, you're looking to diversify, you say, I have enough in the index fund in India, I want to diversify, then by all means do it. But for someone who's thinking about their SIP, saving for the long run, is entering the market, right? I tend to believe that the India story is sufficient.
Okay. Now, given the interest rate scenario, what is your take on investment in traditional fixed income options, whether it is fixed deposits or PPF?
So fixed deposits are very interesting, right? Because if you look at it, fixed deposits are over 7% at most large banks now. If you go to a small finance bank, you're making more than 8%. And if you're a senior citizen, the nice thing about fixed deposits, right? No one said extra on equity or on a debt, but with fixed deposits, right? Senior citizens get 0.5% or more higher. So in that sense, it's a nice risk-free instrument. And I'd say that we are near the peak of where FD rates are going to be. So potentially, I feel they will go up once more as the transmission goes through the market, but they're at a nice, healthy 7 to 8%. And if you're a senior citizen, 8% now. The challenge with fixed deposits, right? They get taxed at your income tax rate. So if you're a senior citizen, you're not paying 30% income tax. I think it makes total sense. But if you're a young person, right, and you're paying income tax and 30% goes away from the 7%, you're back to that 5% problem, and that's less than inflation. So I'd say it's a nice instrument if you're not paying 30%, if you're a senior citizen. But if you're a young person, right, I still prefer the equity index story because you're building value for the long run. Now, I think a provident fund is a great instrument because you get the benefit of tax saving. But the challenge, right, is there's a liquidity lock-in over the long run. So I think if you're someone who needs the liquidity, the mutual fund makes more sense. But if you're disciplined, you're saving for the long run, I think the provident fund gives you good return, and that too in a riskless manner. You know you're going to make your 7-8%. While with an index fund, right, yes, you'll make it over 5 years, but if you're looking in your 1 year horizon, you can go negative, and you need to have the stomach to hold it if you're into mutual funds and equity.
The RBI has been raising repo rates, but most experts are of the opinion that we are at the end of the rate hike cycle. So as a home loan borrower or as a borrower, what should my strategy be? Should I prepay my loans or should I be investing?
Great question, Smriti. If there's one thing people take away from our talk, please prepay. Prepayment is the best way, right, to pull back that additional tenor which has kicked in. Give you an example. If you prepay 5% of outstanding principal every year, your 20-year home loan will get paid off in 12 years. So please prepay. Now, coming to the second question, right? I'd say that do not stop putting aside money for the purposes which you are planning for in order to prepay your home loan. I'll tell you 2 examples of what I mean. So let's say that I need to buy insurance, health insurance, term life insurance. I need to have a 6-month emergency fund. I will do that before I prepay because those things I'll need in case of an emergency. I can't manage without it. So I'll always ensure that I have an emergency fund and I'm paying my insurance. Secondly, right, if you're saving for your daughter's education, if you're saving for your daughter's marriage, I'll say still keep those savings going because let's say I prepay my home loan, but I need money for an education. It's very hard to recreate that corpus instantly, right? So I think at some level you need to balance. But if you have extra money, please prepay that home loan.
Okay, great. Thank you, sir. Thank you so much for taking out time. Let's hope that the advice that you have given will help our viewers make a more informed decision with regards to investments in 2023, especially given that global economic uncertainties are likely to continue impacting stock markets and investment avenues.